Good day, everyone. Hope you are enjoying your day. I want to talk about two income ETFs that I recently bought that are, in my view, have healthy return of capital, healthy ROC, and their NAV has actually been increasing since inception. And so, I'll probably break up both of these into two different videos, just to keep it relatively um, shorter in length in terms of watching the video. But anyway, so the first one is IDVO, and again, like this, these income ETFs, I think are a good way to, like a good good tools to kind of um, decrease poverty, increase wealth, and so I think they're very good for all kinds of people. And so anyway, I've utilized these quite a bit in the last 2 years, and they've been very helpful. Income ETFs in general. Some of these are new. They're the ones that I bought today are new for me. They've been around for a little while, but anyway. So the first one I'm going to discuss is IDVO, and I use the Copilot AI to help with this, and so I asked, could you tell me about IDVO ETF? Answer: IDVO is an actively managed international dividend and covered call ETF designed to generate monthly income while still capturing some global equity upside. It sits in a niche between high yield covered call funds and traditional international equity ETFs, and recent data shows it has delivered unusually strong total returns for its category. Below is a structured, evidence-based breakdown using the most recent sourced information. What IDVO is: Amplify CWP International Enhanced Dividend Income ETF, the ticker symbol IDVO. The inception is September 8th, 2022. Expense ratio is 0.65%. Assets is 1.28 billion as of June 2026. Holdings between 50 to 67 international large and mid-cap ADRs. Strategy: own high-quality international dividend-growing companies. Write covered calls on individual stocks, not on an index. Target 3 to 4% dividend yield plus 2 to 4% option premium annually. Distribution frequency: monthly. And yield profile: distribution rate 6.08% as of May 2026. SEC yield 1.60%, much lower due to the return of capital classification. Recent monthly payouts 0.21 cents per share. Important nuance: a large portion of IDVO's distributions have been classified as return of capital, ROC, about 77% recently. ROC isn't necessarily bad. It often reflects option premium accounting, but it does meet the headline yield overstates true earned income. Portfolio characteristics: so the top holdings include Taiwan Semiconductor, ASML Holding, Bank of Montreal, Nutrien, Alibaba, and AstraZeneca. Geographical exposure: primarily developed markets plus Taiwan plus Canada plus Japan. Concentration: IDVO holds 50 to 67 names, far fewer than broad international ETFs like VXUS, which holds thousands. This makes stock selection a major driver of returns. Performance: annualized total return since inception, 21.5% NAV through March 2026. Year-to-date yield, 7% NAV. 1 year, 36% NAV. A recent analysis notes IDVO outperformed Vanguard's VXUS over the past 3.75 years. So IDVO, 21.54% annualized. VXUS, which is an index with thousands of names, 18.22% annualized. So the people that are picking these from IDVO are doing quite well right now. This is unusual for a covered call ETF. which typically lags in bull markets. So they're actually beating, this is, they give about, about 5% return, over the course of like 5% per year, and that gets distributed monthly, and that's significantly higher than VXUS. So like luck could change, but anyways, they've done well so far. At least in this past annualized, since it's been around. Anyway, key risks and trade-offs. Number one, unhedged currency exposure. IDVO does not hedge foreign currency risk. A 5% US dollar rally can wipe out an entire year of yield, according to analysis. Return of capital, heavy distributions. 77% of distributions recently classified as return of capital. This can be tax efficient, but means the income isn't all from dividends or options premiums. Number three, upside is capped. Covered calls limit gains in strong bull markets, though IDVO's stock-specific call writing preserves more upside than index-based ETFs. Number four, higher turnover. 132% turnover in 2025. This can increase trading costs. Who IDVO is good for? IDVO fits investors who want monthly income from international stocks, lower volatility than pure international equity, some upside participation, more than index-based call ETFs, diversification away from U.S. equities. It's not ideal for investors wanting pure growth, those who dislike ROC distributions, return of capital distributions, those who want currency hedged exposure, taxable account investors sensitive to ordinary income classification. So that gives the finance card, and this is the live data on this ETF IDVO. And I'll click on that, and then it gives you the now today it looks like it's up 0.07, 42.92. Over the course of 5 days, up 0.90, 2.15%. A month, there's been not a whole lot of change in a month. Year, done quite well over the past year. June 16th, 2025, 33.9. And then it goes to June 15th, 42.9. So it went up quite a bit, like 25%. And then we'll look at the 5 year. I don't know that it's been on 5 years. I think it's been available. It was like towards the end of September 2022, and it started 2024, and it goes all the way up to 40. So it's nearly doubled in the course of 4 years, and that's the NAV. And so, in addition to getting that 5% or 5.46% over the course of a year in monthly payments, you're also getting an increase in the NAV. So that's not quite, like, it's not as high of a yield as some of these income ETFs. And the expense ratio is a little bit higher than some of them as well. But they've done a good job picking stocks, and they've done exceptional job picking stocks. And so they've 1 year return 27.95. Sometimes it's hard to replicate, but like it's anyway, they did really well the last year. So we looked at that, and then for the summary, price performance, IDVO inched up 0.16% to 42.92, showing modest strength on a day of broad market gains. Trading volume of 215K was typical for the fund. Recent news developments. Key holdings. TSM gained on comments that AI is becoming insanely profitable for chip makers. Siemens also saw momentum while Alibaba faced deal-related headlines. Top movers. TSM plus 3.59%, and Siemens plus 2.26% were standout contributors, supported by strong semiconductor sentiment and industrial strength. Nutrien, negative 2.46%. America Mobile, negative 1.98%, weighed in on the basket. So I searched this yesterday, so I guess they might have dropped a little bit yesterday. And anyway, so a benchmark comparison, IDVO underperformed major indices with a Dow up 1.18%, S&P 500 up 1.72%, NASDAQ up 2.91%, and also lagged all listed peers, which gained between 2.03 and 3.76%. Market events, a U.S.-Iran peace agreement boosted global equities and lowered oil prices, lifting risk appetite broadly. Investor outlook, with global tech strength aiding top holdings but peers outperforming, investors may monitor whether semiconductor momentum continues and whether lagging holdings rebound. So look at the profile. The fund seeks to provide current income as its primary investment objective and to invest capital appreciation as its secondary investment objective. It invests at least 80% of its net assets in dividend-paying U.S. exchange-traded ADR securities that are located outside of the U.S. and will utilize an option strategy. So some of this is repeated. They got like the issuers amplify ETFs. Dividend yield is 5.46%. Dividend frequency is monthly. Next dividend pay date. I don't think that's accurate because it says monthly. It's June right now. Anyway, so it's probably sometime, I'm guessing, towards the end of every month. So we'll look at the top, like the top holdings. And I actually think this is live data. And I'm learning this on Copilot, but I think this is live data. Taiwan Semiconductor is up 7.9%. We'll see if that's live data. So this says it's up 3.71%. Yahoo. So anyway, this might be yesterday's information, or it could have changed intraday. But anyway, so we'll go back to the then I asked, could you discuss income ETF NAV? And like the NAV, it's a little bit interesting to discuss NAV because it's a slightly confusing concept. But anyway, like if you look at it on the chart, that's the line that this is the NAV of the ETF right here. And so over the course of 9/22 to it hasn't been around for 4 years yet. So over the course of 3.5 years, it's gone. The NAV has done well. You can see that in Yahoo. It's gone up 72.26%, like over the course of nearly 4 years, 3.5 to like 3.75 years. It's gone up quite a bit. And you're also getting a yield here, 5.551%. And the expense ratio is 0.65%. So that's the NAV on the chart. And in terms of the answer, for the anyone who's interested in what NAV is more clearly, income ETF NAV behaves differently from traditional equity ETF NAV because high distributions, options, premium strategies, and return of capital ROC classifications can make the NAV path look weaker than the true total net return. Understanding the difference is essential, especially for funds like JEPI, JEPQ, DVO, IDVO, XYLD, QYLD, XLEI, etc. Below is a clear structured breakdown. So what NAV actually measures? NAV, net asset value, equals the market value of the ETF's underlying holdings minus liabilities divided by shares outstanding. NAV reflects price movement of the underlying stocks, realized unrealized gains, impact of option writing, if applicable, cash drag, and fees. NAV does not include distributions. This is the key point most investors miss. Why income ETF NAV often looks flat or declining. Income ETFs, especially covered call ETFs, pay out a large portion of their total return as cash distributions, so the NAV naturally grows more slowly. The mechanics: number one, the ETF earns dividends plus options premiums. Number two, it pays them out monthly. Number three, NAV drops by the amount of the distribution. Number four, total return equals NAV change plus distributions. So a fund can have flat NAV, a strong total return, both can be true. Example, if an ETF starts at $25 NAV and pays $150 per year in distributions, NAV might end the year at $25.10. But total return could be plus 6% because of the $1.50 payout. NAV alone understates performance for income ETFs. The ROC effect, return of capital. Many income ETFs classify part of their distributions as ROC. Two types exist. One, healthy ROC, common in covered call ETFs, comes from option premiums, does not reduce economic value, NAV stays stable or grows, is tax efficient. Number two, unhealthy ROC, occurs when the fund pays out more than it earns. NAV steadily declines. Long-term total return suffers. Most popular income ETFs, JEPI, JEPQ, DVO, IDVO, XLEI, use healthy ROC. And all the income ETFs I've discussed so far have healthy ROC. Their NAV is staying the same or increasing, and they're also paying out a monthly dividend. Why some income ETFs show long-term NAV decay. Certain strategies, especially index-level covered calls like QYLD, XYLD, RYLD, tend to cap upside, sell calls too close to the money, pay out nearly all option premium, rarely grow in NAV. This leads to high yield, low or negative NAV growth, mediocre long-term total return. This is why NAV behavior is a crucial diagnostic tool. How to evaluate an income ETF using NAV. Is NAV stable over time? Stable NAV plus high distributions equals healthy strategy. Is NAV rising? Rising NAV plus income equals excellent, rare for covered call funds. Number three, is NAV steadily falling? Falling NAV plus high distributions equals likely unhealthy ROC, return of capital. Compare NAV return versus total return. If total return is strong but NAV is flat, the fund is doing its job. So the ones that I don't know if you remember when I'll do another comparison of income ETFs fairly soon, but some of the ones that I gave the best rating to were in this category here. They have rising NAV plus income, and sometimes the way you get there is not you may not have the highest dividend, but you'll end up having you'll have an increasing NAV plus income. So, I mean that's what I like. So I don't necessarily have to have the highest. Like some people like the highest dividend. There's certain companies that give you the highest dividend as well. But anyway, so in the big picture, income ETF NAV is not a performance score. It's just the capital portion of the return. For income ETFs, the real metric is total return equals NAV change plus distributions. NAV alone can be misleading. So we'll stop it there. I went almost 20 minutes, but like I said, I think these income ETFs are a good way to kind of fight poverty. So that's kind of what I've been what I've been using last few years, and to me they're very helpful. Hope you learned something. Hope you enjoy your day.